welcome to India Market Open. It's the last day of trade for the week, for the quarter, for the year. It looks very exciting, Niraj. Globally, of course, Wall Street's on a roll, and I genuinely have no idea what qualified for this very smart pullback. Asia looks mixed, and I guess we are setting ourselves up for a flat to slightly positive start. But good morning. Lots to wrap out, and of course get set for the next financial year.
Yeah, but I mean, when the mother market rallies 10% in a quarter, I mean, you got to stand up and take notice and say that, hey, bulls are in control, right? We may not be exactly having the same thing. And despite all the warnings, Samina, there's a JP Morgan guy who's born today and all of that, but there is just no end or no stopping this run. No stopping, no rationale, no triggers. It's a party, and I think that's what a typical roaring bull market looks like, right? So we were talking about how we'd expect the next few days to be quiet for trade across global markets on back of it being Good Friday, so holiday shortened week. But honestly, none of that's actually played out on Wall Street in overnight trade. A quick check of implied Nifty before we take you through all the global action. Implied Nifty is indicating to a flat start. I'm not very certain whether we'll get a gap down because it's mixed cues coming in from the world markets. Like Niraj and me said, global equity markets are looking very, very, very mixed, right? So while in Asia you've got Australia that trades firm, you've got Japan that's taken a bit of a breather this morning. It's down 1.5%. Hong Kong, China also trades slightly lower. Well, all eyes remain on Australia's retail sales data for the month of Feb, and that is expected to see a marginal uptick. Ahead of that, those markets aren't doing too badly. Apart from that, the Japanese yen continues its downward journey. In fact, it trades at its lowest level in almost 3 years against the dollar, and that could be making those Japanese markets a little nervous. Hong Kong, on the other hand, trades flat to slightly lower. But the excitement came in from Wall Street. The Dow, the Nasdaq, and the S&P 500 made a very smart comeback in trade. The Dow was up 450 points, while the S&P 500 also made a new record high. The S&P 500 has clocked in gains of 10% for the quarter, and it's been the best quarter for the S&P 500 since 2019. Interestingly, it was underperforming sectors such as real estate that actually led the rally in trade, and also small cap stocks. Now, small cap hasn't done as well as the frontline names on Wall Street, very unlike what we've seen in markets like India. But what we saw in trade, in overnight trade, was the small cap stocks actually leading from the front. Remember, the Russell 200 index is up only 4%, while the frontline index is up over 12%. One interesting fact I came across is Apple's underperformance. So while Apple was up 48% last year, this calendar year the stock is down 12%. Waning demand in China, slow adoption of AI is what's actually, denting the gains, or sort of leading to a sell-off on Apple. And there were some articles that indicated that historically US markets haven't actually done well without the participation of Apple. So now whether or not Apple catches up or US equity markets stall their rally is something that we could debate about. Apart from that, you have enough and more data lined up today and on Friday. You have that inflation number that the Fed watches out very closely on Friday. But the reaction, remember, will only come in on Monday. Thursday, of course, which is later today, you will have jobless claims, GDP, and consumer sentiment. But remember, the bulk of the reactions are expected to come in the new financial year, which is going to be on 1st of April as we return back to business. Crude is doing okay. That could be a little bit of a positive for our markets as well this morning. Second day of a decline. U.S. stockpiles have actually done okay. They've risen for the second. Straight month. No major supply concerns. So no real updates coming in on the geopolitical tension in Russia and Ukraine is what's probably keeping the lid on crude. Apart from that, I think that's pretty much what I've picked up. I've not been able to find a single brokerage, a single report explaining to me of why the US markets pulled back yesterday. Volumes are supposed to be light. We are going into quarter end. You'd imagine there's some book closing that takes place. And hey, it's turned out to be the best quarter since 2019. So we'll just enjoy the rally for now. I think that's what people are doing, except for Lakos Buhos of JP Morgan. He's come out and said, Samina, that I think he refers to a correction. It might just come out one day out of the blue. This has happened in the past. We've had flash crashes. one big fund starts delivering some positions, a second fund hears that and tries to reposition, the third fund basically gets caught off guard, and the next thing you know, we start having a bigger and bigger momentum unwind. So he's clearly warned his clients that
beware. But you know, Niraj, I know JP Morgan has said it, we've said this multiple times. The fact is, this is bound to happen. It is only about timing this, right? Because at the end of the day, even yesterday, when we were talking to our guests, if it's not a price correction, it's a time correction. So one way or the other, you have to correct. This euphoria has to ease off. Of course, we don't know what the trigger is going to be. It could be elections in the US, or it could be crude, or it could be geopolitical stress, but that's anybody's guess. Or no rate cuts.
It's a packed calendar. There is this, and for India, sadly, while FTSE's decided not to go ahead and include South Korea and India in the bond indices, but for India, the bond inclusions as well could be a very interesting thing for FY25. So it's a packed calendar for sure. Packed FI for sure, sorry.
Yeah, and I was looking at some of those numbers. March has seen the highest FI inflow in India versus our Asian peers. So whoever thought that FIs were shunning India for reasons beyond valuations are in for a surprise. They aren't waiting for clarity on the election outcome. China, as much as it's cheap, is still not very attractive. And I know I was one of those people who believed that China could be sort of threatening our flows, but clearly that's not happening.
Yeah, and just one last piece before we get to the trade setup. The Chinese markets, with the correction that we've seen in the last few days, has completely erased all the gains it had. So net, the Chinese rallies completely faltered. So anybody who thought that they'll make that bang for the buck has been caught on the wrong foot, unfortunately.
So I think the advice is that just bet on India for now. We look good. We're in a good place. We have no worries as such. But again, very little margin of safety, right? I think that's the only concern that our markets have right now. But as we gear up, yesterday was interesting. The Nifty went home flat. Day before yesterday, mid-cap took lead. Yesterday, it was the small-cap guys that led from the front.
Yeah, so actually, yesterday, from an index perspective, heavyweights aided the index for sure because it was a Reliance, maybe an HDFC Bank and a few others which actually came in. But broader markets, as Samina said, showed mixed trends. Mid-caps did not do well. Small caps did do well. The other aspect that may have played out, and a bit of expiry-led pieces out here, if you saw the 22,000 strike on the options side, puts saw some heavy writing. So that was, remember yesterday we'd spoken how puts were high up, and puts yesterday added to that. So there was some heavy base formation that happened. But on the 22,000 call, there was some significant unwinding. I think that led to a bit of an uptick pressure or what have you call it. But there was a bit of a momentum that came in because of the 22,000 call unwinding as well, which aided the uptick. Now for today's session, you probably argue that private banks have a bit of a tailwind. This whole AIF clarification, provision reversal clarification that has come in from the Reserve Bank of India, and we'll talk about it a bit later on in the show, might have some implications for select private banks and NBFCs like IIFL and Piramal, etc. So watch out for financials having a positive move at the start of the trading day today, particularly some NBFCs like IIFL and Piramal, but even some of the banks, as the City note says. And something that Samina and me spoke about, metals. I find it difficult to believe that they will eke out some very strong gains in light of the fact that the Chinese rally and the data out there is faltering. So much as there is value there, Kenneth Andrade yesterday was speaking about value there, but somehow, look at that 1 month chart, right? For all the fanfare that metals bring about when China does well, the 1 month return is hardly anything. So 3.8%. So very difficult to bet your last dollar on a metal rally. And very difficult to call that even now with the Chinese data and the Chinese markets doing what they are doing right now. But a clutch of stocks out there too. But I'm sure before that, anything that you observed?
No,
Samina?
I think you're right. My only thing on the metal play is that while the demand may be faltering, if the dollar, of course, sees that rate cut and the Fed does what it promises to do, a weaker dollar may spur up commodity prices, and that could provide some support. And of course, the hope is that countries beyond China actually start pulling their weight, which is not happening just yet. I want to talk about one stock, and I don't know, Niraj, if you've done too much reading on this, and that is, I was discussing this yesterday, and the Port Baltimore closure, whether or not that would have any impact on any of those Indian logistic companies or exporters. And one company that seems to have gotten impacted would be Coal India, interestingly. So the coal that is shipped out of Baltimore includes a large portion of thermal coal imported by India for electricity generation. In 2023, India imported 7.3 million tons of coal from the US. through this port. So closure of this port will mean that they will have to take on another route, which could impact the onshoring cost of this imported coal. And you saw the stock reaction. It started the day okay, but I guess when the markets figured out maybe there's a potential impact of Baltimore on coal, India, the stock actually went home with a cut of 1.5%. But I would watch this on my radar. It'd be interesting to see what percentage of their thermal coal is imported and where that bias really sits. But it will lead to some delays, and those delays will increase the imported cost. But beyond that, we've got a bunch of stocks that we are tracking. Also, anything on volumes, Niraj, did you pick up? I would imagine that it would be a light trading day, a light trading week, but doesn't seem like it, right?
No, also primarily maybe because it's the expiry week that we're anyway seeing higher volumes per se. And yesterday, the option side had some terrific volumes. It'll be interesting to see what happens today.
Also, get some perspective on the T+0 settlement. I did try to understand a little bit more about it, but doesn't seem like it's going to have much of a material impact apart from improving efficiency, maybe.
Yeah, I mean, but that's a big thing. I mean, I'd done a small social piece on this, that if we get this going, right, in some sense, there are a few stocks which are available for that. It's great, right, for a retail investor. You put in, you order, you get the monies. Yes, some people might be unsettled because of the longer hours and all of that.
And this is cash markets.
Yes.
Only cash markets.
Yes.
It's only your cash stocks, which are anyway
Yeah, so some of the FIs may not be able to take advantage of that also, but it will be very interesting if we move towards that, then the fact that people sell and get the money if they want to. It will not be available for people who want to do the BTSTs or STBTs, as the case may be, right? Because you want to square the position the next day, so you don't want to enter into the settlement, take the money home, put in the next day.
Or take delivery,
All of those things are out, but for whoever wants this, it's not a bad option at all.
Yeah, it is a step in the right direction. The market's getting a lot more savvy and efficient from what we see it. Well, let's quickly take you through all the stocks that are in action. And today could be a day that may belong to pharma stocks. So we'll watch out for how, just before I go on to stock, we'll talk about the rupee in a minute. But let's quickly do the stocks that are on my radar. Yesterday, it was Cipla and Sanofi. A deal between the two led to Sanofi closing the day with a gain of over 3%. This morning, there's an announcement that Dr. Reddy's has entered in an exclusive partnership with Sanofi as well. They will be promoting and distributing Sanofi's pediatric and adult vaccine brands. Sanofi will be a beneficiary of this one, and so may be Dr. Reddy's. Both these counters is what you want to watch on your radar. Sanofi, after a 3% up move, if I can get Sanofi on screen, that should be helpful. 3.5% up move yesterday, may continue to see follow-on buying as well. Well, apart from that, you also have Zydus and Alkem, and this is on back of FDA inspections that took place. Both those counters may see some weakness on back of some sort of observations that came in. Zydus had 4 observations, and Alkem as well had a bunch of observations. Remember, this inspection for Alkem was conducted on the 19th during 19th of March to 27th of March. So both these counters may see some weakness on back of those observations on the US FDA. Apart from that, we've constantly talked about how everyone's doing fundraising, QIPs, every market, primary, secondary market is active. And this morning, of course, it's GSW Energy, where the board of directors will be meeting on the 2nd of April to consider raising some funds. On that same note, NHPC as well has approved plans to borrow 6,100 crores in the next financial year, FY25. They've got it in principle approval for Loktak Downstream Hydroelectric in Manipur. So those are the two companies that are on the radar on back of fundraising, and you've got pharma that's on news this morning as well. So that's what I have. And of course, we have Wockhardt. The management will be talking to us shortly, will tell us about what they are looking to do with all that money that they've actually raised, Niraj.
Yeah, a few other stocks. So IDFC First Bank obviously will be in focus. Maybe Samina highlighted, but Cloverdale Investment offering up to 15.9 crore shares via the large trade. The floor price is at 75 rupees per share, which is a discount of 3.6% to the last price. So watch out for IDFC First. I mean, this is not a very steep discount. It's not maybe as large a trade as it was in terms of equity for the stocks that came in with the trade yesterday. So remember, yesterday those stocks started lower and stayed lower. It could be an exception to the rule, IDFC First Bank today. So that's one to keep in mind. I'll watch out for BHEL. It's got an order from Adani Power for setting up 2 800 megawatt thermal power plants in Raigad. The broad consideration of the order is approximately 4,000 crore rupees. But there are two aspects to this, viewers, and that is one, that in the midst of the whole talk of going green, we are seeing Indian corporates not shying away from setting up thermal power capacity, because both need to go hand in hand. Enough and more guests have come in and spoken about what's happened to some of the countries in Europe which completely shunned conventional power and went only green and are paying the price for it. So in some sense, there is a bit of a practicality out here that we're seeing in India. There's a lot of order flow and targets for renewable, wind, solar, etc. But this is 2 large thermal power plants that is being given an order for 4,000 crores. Watch out for BHEL, could be in focus today. So that's the other one. And Samina spoke about the fundraising, yes, but Cyient is the other interesting one. They are in pact with Deutsche Aircraft for design of rear fuselage section for one of the plants. Now remember, a few days back, Cyient came out with an announcement for Deutsche. Now they are expanding that, I presume, as a result of which Cyient may see a bit of a positive reaction. So do watch out for this one as well. And I haven't given graphics for it, viewers, so you'll have to hear me out and not just see. But what has happened is that some clarification has come in from the Reserve Bank of India with respect to investments in AIFs. So RBI addressed some concerns flagged in various representations from stakeholders. So downstream investments, directly or indirectly in a debt company, shall exclude investments in equity shares, but include all the other investments, including hybrid instruments, etc. So, okay, let me try and simplify this for you. What the RBI has done is that banks and NBFCs had provided for AIF investments that they would have made as a full provision in Q3. Now, what the RBI has done is given some clarifications which will enable some of these to reverse those as well. HDFC Bank, for example, the contingent provisions were to the tune of 1,220 crore, 1,220 crores pertaining to investments in AIF on a prudent basis. They did that. They said the fair value is this much, etc., but they just did the whole thing. So for HDFC Bank, Kotak Bank, Axis, RBL, they've done some of the investments and done and over with. But now some of these will be able to reverse this as per a Citi note. So that's part one. I was speaking to Vishy, our banking editor, who said that for NBFCs like IIFL and Piramal Finance in particular, both of these could actually benefit from this as well. And I was looking at a sales note that I got from one of the brokerages, which says that Piramal Enterprises could be a beneficiary given that it had conservatively taken about 3,500 crores worth of provisions because of investments in AIS. Now, these clarifications suggest that it might actually be required to take only about 1,700 or 1,800 crores worth of provisions because of these investments, and which potentially means that in Q4, you could see a rollback of nearly half of that amount. So stocks like Piramal Enterprises, IIFL Finance, some of the banks could all be in focus because of this RBI clarifications and might see a bit of a pullback. Watch out for Piramal in particular, but also some of the banks as per the Citi note.
And just to add to your Citi note and add to brokerages, we've talked about this in the last few days. The stock movement really has been driven by brokerages. Remember a few weeks ago, you had CLSA downgrading Asian Paints. They had talked about the fact that increase in competition because of Grasim's foray into the paint business would impact Asian Paints. Surprise, this morning it's Citi that's actually come out and upgraded the counter. So they've got a buy on Asian Paints with a target price of 2,640. They do say that there are some risk involved in Asian Paints achieving that target price, one of them being the higher than expected pricing, which is led by competitive intensity, continued volatility in the economy, and unrelenting pressure from inflationary input costs could impact margins. But nevertheless, they've raised their target price on Asian Paints, and this could be viewed very well positively, especially in light of the fact that there were other brokerages that were not as constructive on Asian Paints. Kalyan Jewellers, this is an interesting one. The stock has already been an exponential performer. It's done 280% returns in the last 10 months. It's up 355% since its listing. It's on the buy call of a lot of technical analysts, and fundamentally as well, it seems that the likes of Citi have upgraded Kalyan. Just another quick one on Kalyan Jewellers. There was the credit rating agency India Ratings has actually upgraded the debt and the paper of Kalyan Jewellers. So that was a positive news flow. This morning, Citi is constructive on Kalyan. They've set the price target to 480. Which is about 24% discount at Titan. They said that they believe there's ample room for the stock to re-rate, provided there is steady execution. So interesting in terms of Kalyan Jewellers as well. The stocks had largely been an outperformer. The numbers were pretty phenomenal as well. And it's very interesting. They are actually playing women addition in the workforce is supposed to be the big strategy for Kalyan Jewellers.
Yeah, I mean, maybe the strategy for a lot of companies in India, and very well welcome as well. So, but yeah, good seeing there. And I think, yeah, as Samina said, Citi note, the Citi note had a very interesting other pair trade. They mentioned that go long Titan and short Asian Paints, if I'm not wrong. That was the pair trade that they'd spoken about as well. So pretty interesting as to that particular piece as well. But, well, maybe more brokerage notes coming on later in the day on the show as well. But that's it on trade setup. What we need to now focus on is editor's cut. And Alex, at the last day of the financial year, it's kind of fitting that we look back at what a year has been. Samina was talking about how it's been a great month for FI flows, but it's been an equally strong month when it comes to block deals.
Absolutely. In fact, there have been several instances over the past year where we've talked about the possibility of it being block deal season. And every month you've been surprised that there are still more to talk about, in fact, and large deals at that. Yesterday, Aster DM Healthcare, 10% stake being sold in two deals or in two separate transactions. So the reason we're talking about this is perhaps to give you a sense as to why these deals are taking place with such frenetic intensity and what does that indicate, because there is promoter selling as well. So Niraj, is it only primarily a factor of the run-up that you've seen across the board? Valuations seem to be ripe to take some money off the table?
So if the Whirlpool management is to be believed, most certainly.
Right.
But the other aspect also, and we'll get to that, but the other aspect, Alex, to be very honest, is also that now people are unfazed by the fact that, there is a promoter entity selling.
Right.
And therefore, this is a top.
It's not a bad word.
It's no longer taboo, yes, You're right. But here's some data. So we're calling it the year of block deals again. Why? Because FY24, and these numbers are a bit fuzzy, they could be a bit here and there because we still have not accounted for the two block deals yesterday, the one happening today as well, Cloverdale selling in IDFC First Bank. But FY24 block deals, over $21 billion safely. Now, why do we call it again? Because FY23 had seen block deals of over 23 billion as well.
Right.
And by the way, just to put this into perspective, calendar year 23, Jan to December, we don't look at it that way, but Jan to December was circa $26 billion. So,
which is even more, yeah.
Yes, FI flows have been there, but yes, the block deals have been incessant, continuous, and large at that. And
we've seen a substantial amount of trades that took place in the last month of the calendar year, which kind of skews the figure. Of course, we've still seen significant in February and in March as well when we get the whole data. Perhaps that'll eclipse all of that.
Very likely that March will eclipse December. Yeah. Very likely so. But yeah, December was strong, 53,000. Jan was a bit of a dip, but Feb was 41,200 crores. So in some sense, the block deals that are happening are very, very large and very, very frequent, which brings the actual number to be so large.
And it's not just the small companies that are seeing this. In fact, you've listed out several frontline companies that have seen very large trades.
Yeah. So shameless plug out here. If you want to know about the smaller ones, there's a beautiful story that our colleague Chinmay has done. It's there on our website. But here's the larger ones that have happened in March. So ITC, arguably the biggest one, right? 17,485 crores or thereabouts. So that was one large. TCS, 9,300 crores. Interglobe Aviation, 6,800 crores. And Interglobe has been a consistent feature now, the stakes that we've seen by the Gangwal family.
Yeah.
Airtel, 5,800 crores. Motherson, 3,600 crores. Of all things, Zomato, 2,800 crores. But again, the deal route here, right? Alex, an overhang on Zomato for such a long time. We saw the trades happening between 155, 160. I think the price was 159. From there, the stock is at 188.
Sure.
And again, just amplifying the point that I was trying to make, that selling of these shares is no longer being considered taboo, because the stocks are actually recovering after that as well. So much as for the last 9 months we've been hearing this, that promoter selling is an indication that this is a peak.
Yeah.
At some point of time, yes, we will hit a peak for sure. That's a natural market cycle. But clearly this shows that promoter selling is not necessarily signifying a peak. I may be a minority, some people might smirk and laugh at this, but guys, for 9 months we haven't hit a peak, right?
So that's an interesting point, and that's more of a short-term implication, right? But I'm thinking also from the long-term perspective. Of course, okay, these managements, or not managements, the promoters are taking money off the table. And I think what you said is so insightful and important to address, because even 20 years back, Niraj, you're talking about if promoter goes below 50%, that means that they're not interested in the business, or they sold 5% stake.
And I say, look globally, guys.
Yeah.
Look globally. A lot of global businesses are not promoter driven. Yes, India is an exception. And again, I'm nowhere saying that promoter interest going down is okay, or it's very good, or whatever it is.
Yeah, but it's not a bad thing.
Yeah, maybe in some cases it might be okay. Some PE firms are running firms much better than what promoter entities did per se. So that's one. Of course, we've had PE exits too, by the way. But that notwithstanding. Now, potential reasons, good valuation is one. But I think deeper markets, you have to admit that
more buyers
are very
and institutional buyers.
Yes,
at that.
and it's not causing the damage on the tape. We've seen that normal FI outflows as well as these block deals are not causing the damage on the tape that they otherwise might have a few years back in Indian markets.
A lot of domestic mutual funds picking up large quantities of stake.
Yes, and there are ready takers for promoter stakes. That's the other beautiful thing, right? I mean, look at the promoter exits, Alex, from Indian stocks. Whirlpool, and that was the big talking point, right? Because the guy saying, the company saying that, we are exiting because we think the valuations are much higher than what's happened, etc. We get a good arbitrage, etc. and all of that. Yeah, sure. But we've seen promoter exits in Pfaudler Inc., exiting GMM Pfaudler, Timken making a large, this thing from Timken India, Fairbridge Capital in Thomas Cook, Clear Wealth in Gokaldas Exports. It's not that all the stocks have corrected.
Yeah.
So again, I repeat, I am a minority. A lot of ancient wisdom would suggest that it's a matter of time before you start seeing the troughs coming in. And sure, that could happen. The only question that I ask is, could that be a part of a normal market cycle? That after every run-up, there is a peak and there is a trough. Does this mean that this is the big... Again, there's a lot of talk around how US markets have seen some significant promoter exits or promoter selling in the last 1 quarter. It's not that the US markets are peaking. At some point of time, they will.
Highs, yeah. Yesterday, they hit all-time highs.
Who's to time it?
So, okay, one last aspect that I want to delve into, which is the pricing of several of these block trades that we've seen. And look, of course, I don't have all of the data in front of me. Perhaps the story that I will also shamelessly plug on the website, NDTV Profit, has more details on the pricing. But 6-7% is normal as a discount to the previous close. And I think you were having a conversation yesterday about this, about the pricing. Why is it not tighter? Is there anything to take from that?
A SEBI-determined formula determining the floor price, and then depending on the demand that the investment banker is gauging, you set it at a small discount or otherwise. Clearly, we know that these discussions are not easy, depending on the book getting built and depending on those factors, essentially, the eventual pricing coming out. So, again, it's up to the investors, right, to see that if the discount on the stock to the floor price is significantly higher, you can kind of know that the demand was probably not as strong as otherwise believed, and therefore think about it. Zomato was hardly any discount, and then you know what's happened to Zomato post that as well, right? From 160 to 190. I'm not saying this is it, and that will keep on going higher. But we've seen this uptick, so that's okay.
And also from the perspective of this large seller, a stock that has gone up 80% or 50%, 6% is not that material from that perspective, if you think about it. Okay, so we've hopefully given you a bit of perspective on these large trades that are taking place. In fact, you should watch out for the start today as well. Don't be surprised if you see a few more, and we'll get you more details on that as well over the course of the day. For now, we're slipping into a very quick break. On the other side, you've got the major F&O cues. Remember, end of the financial year, last trading session, and also the monthly expiry for options. So lots to talk about. Do stay tuned.
Welcome back to India Markets Open. Well, we are taking stock of what we can expect on the final trading day of FY24. We are talking about what we can, in fact, expect when it comes to the final expiry in terms of futures and options going in. Are we bracing for some choppiness? Well, let's start by taking a look at how things are panning out at this point in time. We start off with the Nifty, and well, the Nifty is holding on to the 22,000 mark at the moment. And in terms of rollovers too, they stand around 47%. Of course, this number will look a lot larger as we move into towards the end of the session. But for now, of course, we're keeping an eye on April futures, and the April futures have already picked up quite a bit of steam. Remember that it was a relatively slack month when it comes to the month of March in terms of the Nifty futures OI. But let's move on and talk about the Bank Nifty, and that's where the April futures are again seeing some traction coming through. So keeping an eye on that one as well. But today it will also be about the options expiry for the Nifty. Now, we have seen a lot of traction yesterday in terms of puts, considering the Nifty moved higher, and we saw a lot of writing around puts, which would be around the strikes for 22,000, 22,100. The question really is that where do we go from here? What is the overall options distribution picture showing you? Well, at the moment, your max OI is still with the 22,000 call, or pardon me, the 22,000 put. And on the higher end, keeping an eye on 22,500 call, where you have max OI. It's a roughly 500-point range, well, based on open interest. But you never know how things can pan out. And we are not ruling out choppiness, because we will have a lot of institutional participation, specifically towards the end of the session, just like we did yesterday. And, that certainly did induce a lot of volatility in the final 20-30 minutes of trade. And that is perhaps what you can expect today as well. Well, but moving into stocks too, we're talking about the April futures, and I know the change numbers will look very, very inflated, but that's because we are also going into a new expiry. That said, we did see longs in Z Entertainment and Titan, and of course, Biocon, Tata Chemicals, and Shriram Finance saw a little bit of short build-up. The question really is, what do you do at this point in time? How do you play the intraday benchmarks, as well as what is your positional setup? Well, let's get in an expert opinion here. We have Bhavin Shah, who's joining us from Dolat Capital. Bhavin, morning. Thanks for joining in. Let's start off, as usual, with your views on the Nifty and the Bank Nifty. How are you trading them?
So, as we have pointed out, believe that Nifty on downside will continue to see good amount of support, specifically given that it's a March end. The rally that we have observed over past couple of trading sessions is in sync with the seasonal trend that we usually observe towards end of the March. And my sense is that even going forward for today, the way OI has been built up, don't see major move below 22,100 for Nifty. There could be an intraday drawdown. However, at lower levels, likely to see good amount of support coming in. At the same time, on upside, not anticipating much beyond 22,200 for the day. So that is the kind of range that I'm anticipating, particularly on index for today.
All right, mistaken apology here, Bhavin Mehta. Well, just to correct your name there. But how are you playing the stocks then? In that case, I believe you have one call at least on Tata Motors, if I'm not mistaken.
Yes. So Tata Motors has actually seen good consolidation base. We have seen breakout occurring 3 days back. Post that, stock has once again witnessed some amount of price correction. There is a good entry point in the range of 965 to 955 range. Stop loss 940 for target of 1050. Also note, auto numbers will be in focus going forward. So my sense is that there could be a very sharp move on upside for Tata Motors. And in this case, participants can also look to play option strategy via bull call spread by buying 980 call at around close to about 35 rupees, sell 1050 strike call. But this is for April series. So your maximum risk would be close to about 34,000, and max profit in this case would be close to about 51,400.
All right. So there you have it, at least as far as the options structure is concerned, where we have a bull call spread there for Tata Motors. But Bhavin, you also have a view on Reliance Industries. Can you take us through that?
Yes, so very strong move in trade yesterday. Sense is that stock is finally breaking out of that consolidation zone, and both the stocks, if you look at Tata Motors or Reliance, they have held pretty much strongly around 50-day exponential moving average and consolidated around that range. After which we have seen a breakout on the price pattern. So my sense is that we are breaking above level of 3,000 eventually and moving closer to target of 3,200 to 3,300 on the upside. Stop loss in this case will be closer to 2850. So one can make an entry either on decline or at current levels with the stop loss of 2850. Here again, same strategy, bull call spread could be played for April expiry, wherein participant could look to buy 3,000 call, which is available close to about 78 INR, and sell 3,200 strike call at around 18 rupees. Maximum profit in this case will be closer to 35,000, and risk will be around 15,000. So yeah, risk reward wise, this definitely looks a better yielding position.
Certainly, a near 1:3 risk to reward. Of course, that's on maximum profit and maximum loss on that spread as well. But on that note, Bhavin, taking a moment to thank you for joining us and taking us through your views in the markets and giving us a handful of trading ideas. With that, it's over to you, Niraj.
Thanks for that, Agam. And that's the derivative piece for the date's expiry day. So keep this in mind. And of course, on Monday, we'll talk about the new series as well. Now, remember, we've spoken about some of the key things to monitor. There is some fresh news that is coming in from ICICI Securities. Now, why is this important? Because the company's shareholders have approved the delisting, but it is not as simple as a straightforward approval that might come in. Why do I say this? Mimansa, my colleague, joins in to tell you precisely that. Mimansa, good morning.
Good morning, Niraj. So the proposal to delist ICICI Securities and merge it with ICICI Bank has come through. The results of the shareholder vote released earlier today showed that 71.89% of the shareholder votes were cast in favor of the proposal. Now, to delist a subsidiary and merge it with the holding company, SEBI rules that votes in favor of the delisted votes in favor must be at least 2 times higher than the votes against it. With this, shareholders of ICICI Securities will get 67 shares of ICICI Banks against every 100 shares held. Now, to bring in some context, the facility of remote e-voting was made available to shareholders from March 22 at 9 a.m. to March 26 till 5 p.m. But there was a lot of criticism on social media from retail shareholders against ICICI Bank as to how the bank was canvassing them to vote in favor of the proposal through phone calls, WhatsApp text, and even home visits. Having said that, only 32% of public non-institutional shareholders, which includes retail shareholders too, voted in favor of delisting. Nearly 84% of public institutional shareholders voted in favor of the proposal. Mutual funds particularly have voted against the proposal to delist ICICI Securities because they were unhappy with the swap ratio and the valuation process that was conducted on ICICI Securities. Shareholding pattern as on December 31 shows that foreign and domestic institutional investors own 16.68% in the broking firm, while non-institutional public shareholders held 88.55% in the company, according to the stock exchanges data.
Okay, well, Mimansa, thanks for putting that into perspective. So while institutions drove this, and it's going to happen, but it's an interesting development. Maybe not from a stock perspective per se, but an interesting development nevertheless. But like we said, a lot of interesting developments that are happening and a lot of things that are moving around. Let's talk about all of those on the fundamental side with Nirav Asher. He's head of equity research at Manharlal Securities. Joins us right on the show. Nirav, good having you. Good morning. Thanks for joining in today. Nirav, I want to start off with banks or NBFCs, because of this whole RBI clarification on the provisions that companies or financial institutions have to do for the investments in AIF. It clearly seems that in a lot of cases there might be write-backs possible. In the case of Piramal, maybe even half of that amount, or what have you. Have you guys looked at this overnight or early this morning? And what is your view on the same if you have looked at it?
Yeah, good morning and thank you for having me on your show. Yes, as far as the banks and the NBFC provisioning is concerned, I think last quarter we have seen that a lot of NBFCs they were forced to do the provisionings, and they were very aggressive provisionings which had a very deep impact on the profitability. And with some relaxation, of course, with respect to these rules, I think there could be some write backs, which could be in the nature of an exceptional income only, but still it will have a positive impact as far as stocks are like pyramidal enterprises are concerned.
Okay, so Nirav, would just to clarify, would pyramidal enterprises be the biggest beneficiary, or do you believe even an IIFL, which is under a bit of a cloud right now because of all the regulatory issues around it, could show a bit of a pullback?
Yes, definitely. But I think pyramidal enterprises would be the biggest beneficiary, followed by the likes of the housing finance companies. They could benefit, particularly this IIFL finance, could also benefit out of these relaxations.
Got it. Okay. And Nirav, aside of that, we've seen an Angel One do a QIP. We've seen blocks that have happened in CDSL. So the non-lending capital market financials, do you have a view there? Is there are you buying into some of those, or are you staying away currently?
Well, at this point of time, we have been staying away from these stocks because we feel that the valuations are on the higher side. So we wait for better valuations in the near future where we get better deals.
You're doing well. Nirav, we are at the end of the financial year, setting ourselves up for another quarter, another busy calendar as well. What is your advice to investors? Is rebalancing, required even more now, given the recent run-up that we've seen? And maybe it's time to take some profits off the table, reallocate funds from the broader markets to large cap. Is that the sort of advice you'd be giving to investors, or it's okay to remain status quo?
Well, it's definitely a time to rebalance and have a look, have a very deep look at the portfolios. Because as far as the small cap and the large caps, mid cap stocks are concerned, we are seeing that the valuations are looking quite stretched. In some cases, the small caps and the mid cap stocks are ruling at P multiples of 70 times, more than 70 times. Now, this essentially means that the market is factoring in that the earnings are going to double in the next 3 years. Now, it's very difficult for a large number of companies to achieve this type of a feat. And so I think the crux of the matter is that the markets are expecting, they are having sky high expectations from the mid cap companies and the small cap companies. Now, many of these companies may not be in a position to deliver these type of returns. They may not be in a position to double their earnings in the next 3 to 4 years. Failing which, I think there's definitely going to be pressure on the valuations. So there are going to be a lot of twists and turns as far as the mid caps and the small caps are concerned. I think the expectations are just too high. So I think it's going to be now the task of the large caps to do all the heavy lifting, and that's what we've been seeing in the last few sessions in the markets. We're seeing auto stocks, the frontline auto stocks beginning to perform. Yesterday we've seen Reliance perform, HDFC Bank, L&T giving good support to the markets, and finally even the private sector banks coming to the rescue as far as the markets are concerned.
Right. Nirav, I just want to pick up on that block deal conversation you were having with Niraj, and I want to specifically talk about Aster DM. I don't know whether you track this counter, but the performance has been pretty exponential. It was up 35% in the last 6 months. It's done well over the last 1 year. Lots of acquisitions, lots of stakes, expansion. So there's a lot happening with Aster DM. The stock was down 8% yesterday. Was that an opportune time to invest in the counter? Did you go out and pick it up? Did you recommend it?
Yeah, so the healthcare space is looking quite attractive, and Aster DM has a very strong presence in the overseas markets also, and they are a big player in the Gulf region also. I think not only Aster DM, I think we have Apollo Hospitals and Max Healthcare. All these stocks are looking quite exciting because the growth potential is immense and there is a lot of consolidation which is happening in the healthcare space. And I think the results of all these will be visible in the next 4 to 5 years. So I think definitely this is a space to watch out for and buy on corrections.
Okay, well, since we're talking of block deals, let's get in Varsha to talk about the key bulk/block deals that are in focus this morning. Varsha, good morning.
Good morning, Niraj. So, few bulk and block deals that you should watch out for today. So, starting with Aster DM Healthcare, wherein yesterday we had this news that there was a stake sale of almost 10%, but buyers and sellers were not ascertained. But today we do have list. Olympus Capital Asia Investment sold almost 9.8% stake. The total transaction value was 1,978 crore. Now, they sold stake through two affiliates, and the shares were sold within a price range of rupees 405 to 406 per share, and stake as of December 23 stands at 18.9%. Now let's see who were the buyers for this transaction. So Nippon India Mutual Fund bond almost 2% stake, followed by SBI Mutual Fund, then ICICI Prudential and Small Cap World Fund were also the buyers. Then we have CDSL, where Standard Chartered sold entire 7% stake in the company. They have offloaded 75 lakh shares at an average price of 1,688 a piece. Now total transaction value stands at almost 1,200 crore. Details of buyers could not be ascertained. Then we have Z, wherein Parag Parikh Mutual Fund bought almost 62 lakh shares, which represents 0.64% at almost 141 a piece. Then lastly we have Sami Hotels, where Chicago-based Equity International Blue Chandra sold 4.7% stake at an average price of 206 per share. Total deal size is almost at 209 crore. Among buyers were TT Asia Pacific Equity Fund, which bought 3.7% stake, followed by Society General, then DNB Fund were also the buyers. So these are all the block and bulk deals that we have for today.
And it's been exciting, Varsha. In fact, that's one space of the market that we've not been able to get our eyes off, be it block deals or be it listings. It's the money, it's the easy money that we've called it for very, very long, continuing to find its way into our markets. Nirav, I want to just close out that conversation we were having on pharma, hospitals, etc. What about diagnostics? There was a brokerage buy call as well that came out on Dr. Lal Path Labs only yesterday. These stocks have fallen quite sharply, but are now seeming to appear that they seem to be stabilizing. Do you see them getting re-rated anytime soon?
As far as the diagnostic stocks are concerned, I think they generally tend to go up when there is some news or rumor about some certain pandemics or outbreak of some disease, etc. So that is generally the time where we generally see a lot of interest in these diagnostic labs. But otherwise, I think it's been a steady state business, and I think the business is growing at a fairly steady rate. And again, over here also we are seeing a lot of consolidation which is happening. A lot of smaller, what we call the smaller labs, which are being run by independent professionals, are being taken over by the larger players. So I think we expect this trend to continue, and this inorganic expansion in a way is going to fuel the growth as far as the entire industry is concerned.
Right. We've also got this Kush Bohra fund of kushbohra.com. Kush, before I get your view on the index, let's wrap up this conversation on pharma, hospitals and diagnostics. Dr. Lal's was a big mover in trade only day before yesterday. What is the call? Any trading opportunities in the hospital or diagnostic space?
Hi, Samina. First of all, a very good morning to you and to all the viewers. Well, I was listening to the conversation just before, and I completely agree. These are perhaps the momentum or trigger-based trades. Even though Lal Path Labs has taken out some of the key levels and trading above the 20-day moving average, I'm not sure if the rally is entirely sustainable. So, diagnostic space is something that I will wait and watch closely just to see if there is any kind of trend, meaningful trend reversal. On the other hand, as far as the hospital space goes, that's where we've seen a lot of traction. one stock that's constantly been on our radar, and we've recommended to our clients as well, time and again, is Rainbow Children's Medicare. So have this one on your radar. The stock has rebounded pretty smartly from the 200-day moving average and also sustaining above the key averages. So I think Rainbow Children's Medicare, from a medium-term perspective, looks like a good buy. 1400 is something that we're taking on as a target from here, from the current levels.
Okay. Kush, good morning. Niraj here. What's the view on the index? I mean, do you reckon that we could inch up higher after what we did yesterday?
Well, hi, Niraj. First up, look, for today, we may perhaps be in a range. I'm not entirely sure of the bias here, and I'll tell you why. Although it looks like, it could be positive and we could be, knocking at the doors of 22,200 again, we've time and again seen that on expiry days, the markets tend to, gravitate towards the maximum open interest space, and that stands at 21,100. So even if there is a mild gap up opening, I wouldn't be surprised if we perhaps come back to those 22,100 levels. So it's a little dicey to call. At best, the day could be range bound. However, what is exciting is that we're looking at 22,500 and perhaps even 22,800 in the April series, perhaps maybe a little later also. But the bias is starting to now look positive. Technically also, if we knock at the doors of a level constantly, there is a chance that we break that down and move higher. 22,200 for the last couple of sessions we have been attempting, but maybe due to the expiry, due to the March effect, whatever you call it, we've not been able to take that out meaningfully. So I think in April we are looking at new highs, perhaps even 22,800.
Okay. And Kush, what about the specific stock recommendations for the morning?
A couple of them. First is BHEL. We've seen this stock rebound pretty sharply, pretty smartly, in the last couple of sessions. Although it did give away from the highs yesterday, of 250. But again, this could just be the expiry effect playing out. So 248, 252 are the targets that we're looking at. 239 is where I would place my stop loss. Another stock from the cash space is VA Tech Wabag. Here too, the recovery has been very interesting, volume backed, and some of the momentum indicators that we track are suggesting further upside. So 780 and 800 are the levels that we will be looking at on the upside, and 740 is where a nice support zone comes in.
Nirav, you want to come on BHEL? I believe they've won a 4,000 crore rupee order from Adani Power for the Chhattisgarh plant. Fundamentally, enough triggers on BHEL for a long trade?
Yes, definitely, because BHEL has a very strong order book. I think the order book is now close to 1,10,000 crores, and their execution has also been improving. During the last quarter, the order inflow was up by about 137%. So I think BHEL is in a very sweet spot, and plus the power sector has been doing exceptionally well. And there are a lot of orders as far as boiler, turbine, generators, etc. are concerned. And I think BHEL could be a very big beneficiary of this. 70% of their order book comes from the power sector. And I think they've been trying to get their act together as far as their working capital is concerned, and recovery of the older dues, etc. Certain inefficiencies which are there in the system are being addressed. So I think that should reflect in the coming quarters. And for as far as BHEL is concerned, the next big trigger could be coal gasification and green hydrogen, which could be very big growth areas as far as BHEL is concerned. So get very positive on BHEL.
Okay, so BHEL, certainly watch out for that large order win, and therefore would be firmly in focus this morning. From amongst the stocks that had a strong move in trade yesterday, and a clutch of mid caps and small caps, certainly small caps in particular had a good move, but IFL and JM Financial both bounced back in trade. Olectra was up about 9% in trade yesterday. And Sangvi Movers 3 days on a trot now has done well. Kush, Bohra, a quick thought on not a very liquid stock, Sangvi Movers, but has had now 2-3 days of a very strong run. Could it do more?
Well, Niraj, I'm glad that you brought this point up. If I can give a quick overarching view, a couple of days, maybe perhaps a week of downside in these mid cap and small cap names, and everyone started questioning, whether this is the end of it all. It rarely is, right? if you see, as a lot of names from the PSU space have also come back to previous levels, or at least within a striking distance. So I think it's just a matter of absorbing that volatility. The stories are very much intact. It was just that the froth that was thankfully taken out at the right time, and now these stocks with a semblance of sanity have started to move up again. Sangvi movers, we've had it on our radar for a very long time. A little less liquid, perhaps, yes, but I think fair enough if someone wants to take a large investment position also. So from that perspective, stocks actually been doing well. The dips have also been bought into. So I don't see a reason for anyone to exit out of this. If someone's looking for a fresh entry, then too it's a good time because the volumes have picked up. The momentum indicators are suggesting further upside. So 1450, 1600 levels are on the cards, and a strong support zone comes in at 1220.
Okay. Thanks for that view, Kush. Stay on, Nirav and Kush. We'll take a short break. On the other side, we'll speak to Jayesh Mehta of DSP Finance on the bond markets because of two key reasons or two key developments overnight. Stay tuned. Back with India Market Open right here on NDTV Profit. The implied open suggests a start which could be minor, maybe a minor bit of red if you will, but let's wait and watch how this shapes up. The rates will flash on your screen once the pre-open rates come in. But I think there is a very important conversation to be had, a quick one but an important one. There are two developments that have happened which would be important for the bond markets today and the near term. One, the news has come out about how the Indian administration will sell bonds worth about $90 billion, give or take, in the first half of the fiscal year, which is much lower than the estimated Bloomberg survey number. So that was part one. And part two, FTSE is held off adding South Korea and India to key bond indices. Not that it was in the realms of tremendous speculation, but it's not happened. Now, is there an implication of both of these on bond markets in the near term or the very short term? Jayesh Mehta of DSP Finance joins us to talk about his view. Jayesh, good morning, and thank you for agreeing to talk to us. How would each of these developments impact? Can we start off with this borrowing calendar and the numbers that have come out? Is that a surprise to you as well, or did you kind of anticipate the same numbers?
Good morning, Niraj. It's a good surprise to everybody, right? Historically, we had always, the first half is always front-loaded, 57 to 60% of the borrowing. And this time around, that would impact liquidity also because it's being an election year. If more money is there with government and because of election, if they can't spend, it also impacts liquidity. And of course, the first half borrowing being lower than anticipated. So there is definitely good upbeat positive opening will happen, and of course, this is also month end. So I won't be surprised if we touch 7% today itself. Maybe 1-2 basis point plus minus, but yes, that's a pretty good news as far as the borrowing program is concerned. So that's very well positive surprise to the market.
Good to have positive surprises, don't we, Jayesh? Does the FTSE holding off adding India to the key global bond index a big negative development? Because frankly, to my mind as well, everybody's talking about JP Morgan and the Bloomberg index. This didn't come in the realms of an expectation, at least to us, so immediately. Was this anticipated, and therefore is it a negative?
No, you absolutely nailed it correct, Niraj. Nobody is right now even bothering about it. Like, as it is right now to digest JP and Bloomberg index, which is 23 plus 3, which is as per the tracker, right? 76. And when it is good market, you always know there is tracker plus also comes in, right? So that itself is large enough flow for us to digest at this juncture, right? So nobody was even thinking about it as and when it comes. It's better if it comes later in next couple of financial years. That would be actually better for us.
Right. Jayesh, I just want to link, this is Samina joining in as well. I want to link what happened on Friday. I know that's a week ago now. In terms of the big fall we saw on the dollar-rupee pair, and that triggered quite the sell-off for global investors in the Indian bond markets. From what I remember, data showed that foreign holdings dropped by about 38 billion rupees on Friday itself. A lot of unhedged positions of investors who had come into the bond market actually checked out. Now, please help me link those two together. The RBI, interestingly, was conspicuous by its absence, which is very rare, but we did see that. As we go ahead, given the kind of inflows the Indian bond market's expecting, I know we've already got $10 billion. If we need to get some more in, do we require a stable, stronger currency? And that, in turn, will determine a better trading range for the dollar-rupee pair?
So two parts, and maybe I think I did mention that earlier, maybe a couple of months back, like where, maybe a month back, where, people were assuming that all these flows which is coming by FPI is just running the index inclusion. The answer is no. The lot of flows which was coming was because rupee was very stable, currency was very stable, and the next move, people were expecting an appreciation, right? In spite of RBI may not allowing a very big appreciation, but with the index flows come in and, other stuff, the India macro doing so well. So, globally people were expecting rupee appreciation. And the best way to, go long INR is to actually buy government bonds, right? So from that perspective, you had bought it with a view of making gains in the currency appreciation. And naturally, that didn't materialize because of that particular move happened mainly because of China valuation. And because of that, the currency moved, and for right reason or whatever reason, RBI didn't step in. But RBI did step yesterday. So it was only on that day they remained neutral. And naturally, people who had bought government bonds for currency profit, right? They naturally have to stop out, and they are all mark-to-market players. So they naturally have to sell something.
Right. Very quickly, Jayesh, before I guess Niraj will come in on a bond question. Now that the year-end demand, I'm assuming, for dollars has been done, the offshore market is also stabilized, not too much of an arbitrage gain there. Do you feel like in the next quarter, at the start of the next financial year, the trading range for the rupee could be with the upward bias, or do you think an 84, 85 cannot be ruled out even now?
No. So it is basically the bias is rupee appreciation.
Okay.
It's just, but global volatility is such, right? Last couple of days, you are reading reports like, by September, before election, the oil could shoot to $100 and all that kind of stuff. So that we'll have to see. You can't predict everything, right? So we'll have to see that how it pans out, right? If that happens, I think the biggest challenge for our currency right now is crude oil price, right? So that's the only thing. As long as that remains stabilized, we should be fine. We should look at appreciation.
Okay, but the big news, as Jayesh Mehta said, a big positive surprise is the borrowing number. And Yields may be touching 7 mark today itself, 7.03 if I'm not wrong, as things stand. So let's wait and watch how it shapes up. But Jayesh, really appreciate you taking the time out and joining us for this quick perspective. Thanks so much.
Thank you. Bye.
Well, that's the view from Jayesh Mehta of DSP, and positive news from a bond market watcher's perspective. Does that have any implications on PSU banks today? Remember, yesterday there was a Nomura note which said that their roadshows across, I think, the Asian sphere seem to suggest that FIs are now asking for PSU banks as well. This is unheard of, because hitherto PSU banks from an FI perspective, say for one maybe, were considered to be not so acceptable or not so much in fanfare. Will we see the reverse happening? Because the valuation's probably still in favor. Nirav, SBI is the easy answer. I'm wanting to know if anything else beyond SBI as a PSU bank falls in the realms of investments from a 12 to 24 month perspective.
Yes, apart from SBI, I think one could also have a look at the other larger players like Bank of Baroda, Punjab National Bank, Union Bank. I think these could be the stocks to look out for because there has been a consistent improvement in performance. The valuation parameters are also looking quite attractive. So overall, it's a good combination and a good place to watch out for as far as investments are concerned.
Right. Nirav, of course, you've highlighted a few counters. I just want to ask you if you know what's happening on Tata Investment. I'm just very curious because on the way up, we didn't know why it was going up. On the way down, Niraj makes it a point to mark a 5% lower circuit on that, and I'm going to mark a 4% up move on that this morning. But any idea what's going on here? And I don't even know if you have a call on this one, but I'm just curious.
So it's an investment company, and basically there were all kinds of rumors about Tata Sons and getting listed and all kinds of companies where there is this hidden value in the stocks, and whether this materializes or not is something which only time will tell. So I think this stock has entered into that volatile range where it is very difficult to take a call on the stock price. What would be the inherent value of the stock? So I think it's better to stay away from the stock at the moment. So I will go on the negative side as far as this stock is concerned.
Well, 4% for now. Let's wait and see how this shapes up. By the way, the pre-open rates have settled, and let's just mark the Nifty and see what the index is doing. So it's not starting off negative. That's the other key thing. The pre-open, the implied open these days is very deceptive. Not that by a wide margin, but be that as it may. There is an uptick in CESC for 2 days on a trot now, up 5% again today. And I think amongst other things, I'm just trying to pull out what the news flow around that group is, because in the session, Philips Carbon Black, or PCBL, has approved an issuance of up to 16 million warrants at a price of 280 rupees per share per warrant to Rainbow Investments, Quest Capital and Stel Holdings. I think promoter entities, one or two of these. But point being, the current price is 275. The warrants are being issued at 280, and no surprise that PCBL is up about 4% in trade today. Now, I want a technical and a fundamental view both on these stocks. To Kush first, the technical view on CESC, 2 days on a trot now up, and PCBL, which also has had a pretty decent run in the recent past.
Well, I think, most power names have been doing well. This was one of the last entrants, to the party, and I think, will have a catch-up trade for sure. It is opening above the key resistance zones, which means there is now a clear run even to those 140 and even 148 kind of levels. So I would be buyer, maybe not at the opening, perhaps if it dips a little bit, but, no harm holding it up till, those 148 kind of levels. So that is on CESC. As far as PCBL goes, here too, we've seen some positive traction. The opening is not really above, the key resistance zones, actually quite right at the, resistance zones. So I'll wait and watch here. Perhaps any kind of tips again towards those 270 levels, between the 265, 270 zone will be a better buying opportunity. So PCBL, buy on dips, and a similar view on CESC as well, although CESC looks a little stronger on the charts compared to PCBL.
And Nirav, PCBL fundamentally warrants at 280 versus the current price of 275. It's done some right things on the business side. Have you looked at this fundamentally?
Yes, definitely. They have managed to improve their financials. Basically, as we know, that carbon black caters to the tire industry. It's a critical raw material as far as the tire industry is concerned. And apart from that, the recent entry into certain niche businesses, they made certain acquisitions in the recent past, and they are entering into some very exciting areas, some niche areas. So I think this fundraising could also be a part of the exercise to finance this acquisition.
Right. Well, we're gearing up this morning. Kush, very quickly, couple of movers in pre-open trade. I don't know if this is how it's going to play out, but if it does, a strategy on that would be helpful. CESC, that's up 8% from the way we are looking at it in pre-open. If we do get a gap up on this one, looks like a good trade for the day.
So we just discussed about that, Samina. 148 is the target, but okay. I would buy on dips because there's an emotional gap up opening on this one.
Very quickly, apart from that, I didn't get your view on Tata Investment. Do you have one? A 4% up move is expected after many days on this stock.
And I'd avoid, not the kind of stock that I really venture into. Far too volatile.
Far too volatile. Even some of these Adani Group names aren't looking too bad this morning. So Adani Energy is up about 1.5% in pre-open. Adani Ports is expected to see a good start. Anything on the Adani names? Do you track this one closely, Nirav?
In order of priority, we like Adani Ports and SEZ, and recently the news flow has also been quite positive. They have acquired Gopalpur Ports. There have been certain brokerage upgrades also for the stock, and this is followed by Adani Power. I think Adani Power is also likely to perform quite well. The third is Adani Enterprises, which is present in the niche areas like airports, semiconductors, renewable energy, etc. So I think we like these three stocks. And yesterday we had some positive announcements on Adani Green Energy Limited. So I think quite a few Adani Group stocks have been doing well on the bourses.
Right. Kush, you want to very quickly comment on Piramal Enterprise. Fundamentally, of course, Nirav has shared his view. Pre-open is showing that it could see a 4 to 5% gap up. Do you have a view on this one, a trading call?
For me, Piramal Enterprises, is an avoid, has been for a while. So, I'll stick to that.
Okay. We should mark a small cap stock called GOCL Corporation. They have sold a land parcel for which they'll get 3,400 crores. The current market cap of GOCL Corporation is maybe 1,800 crores or 1,900 crores on close yesterday. The stock will come up on your screen, but it's up 20% in the session this morning. So the pre-open session has already shown that. I mean, if you look at it like for like, there is probably still some room, but let's wait and watch. We haven't done some fundamental analysis, so difficult to say if there is more value here or no. Maybe we'll put Nirav Ashar in a spot. We'll ask him about GOCL. Nirav has heard me. He has 5 minutes to try and think about what he will say about GOCL before we get back to him. But here's how the markets are starting off this Thursday morning, the last day of the financial year. And we're starting off in the green by 1/3%. 76 points higher for the Nifty 50. So good going there, or a good start to the trading day today. Let's get the banks up about 1/3%. IT doesn't have news, so mid caps and small caps is what we'll stick to. Mid caps and small cap index yet again 0.83%. Now I don't know if this is a classic year-end move that is happening in some of the small caps, but there is gains for sure. Palpable gains. Let's bring up the heat map and show what's moving and what's not. On the losing side, not too many losers. So very quickly start with the losers. The only one talking about is Britannia. third day on a trot now, by the way. Britannia is starting amongst the list of top losers. Then it kind of does something else and moves away. Titan must be down because of the City note today, wherein they have said that they rather buy Kalyan as opposed to Titan, but they have a pair trade of overweight Titan, underweight Asian Paints nevertheless. But Kalyan is a better bet according to them. Maybe we'll mark Kalyan Jewellers too. What's done well today? Nothing too great. Power Grid is up about 1.4%. There is strength in Dr. Reddy's today. Wipro and Infi are in the green. And I saw Adani Ports, if I'm not wrong, in the green, about 0.5%. Yesterday's premier performer, up about 0.5% as well. Tata Consumer and Nestle in the green as well. So nothing too dramatic. Maybe a bit of a defensive bent to the market, if you will. But yeah, the only ones worth talking about before Samina takes over for the mid caps and the small caps are Power Grid, which is up about 1.5%, and Apollo Hospitals, which is down about 1.5%. Though I must say, IT is making its presence felt a little bit in the session today, and autos are sulking. Samina, what are you spotting?
There's some action that we picked up on in our trade setup. So you have a few stocks that are catching our attention, stocks that are, our guests have also alluded and talked about. I'll start with Piramal Enterprise because that's a counter that's turning out to be one of your top gainers in trade on back of the RBI circular, with clarification from the RBI and the AIF investment circular. Remember, you had Piramal Enterprise that had provided for a lot more conservatively. They will be, of course, writing that back, and that is going to be a huge positive, or rather already is, for Piramal Enterprise. The stock is up 3.5% as we see it. You've also got PCBL, which is Philip Carbon, 4% higher on the counter in trade right now. So that rally also there for everyone to see. I'm going to pull up Tata Investments, not for any fundamental news trigger, but only because the stock has been catching our attention pretty much every morning. It's actually up for a change, a 2.5% move. The counter is declined 40% in the last 10 odd days. So it's interesting to see that maybe it's finding a bottom at these levels. Maybe those valuations are now making sense for Tata Investment after its 40% correction. BHEL is also on the list. It's also looking good in trade. They won a pretty massive order from Adani to the Adani Power to the tune of 4,000 crores, on back of which BHEL is seeing a rally of nearly 3%. I'm going to bring up Sanofi India. You had them in the news yesterday on back of a deal that they signed with Cipla for exclusive distribution. They've also now signed a deal with Dr. Reddy's, where Dr. Reddy's will be exclusively distributing their pediatric and adult injections, on back of which the stock is seeing a marginal uptick of about 2%. So a few gainers, Niraj, but I think all in all, the broader market's looking fairly stable as we see it right now. No runaway rallies, but no runaway losses either.
And just a few of the names, I'm sure. I just want to mark GOCL once again, just to see how it's formally opened, because it opened about 19.57 in the pre-open session, 11% now. So yeah, sometimes don't chase stocks as they move higher. Samina must have marked VIP, but if not, just want to mark that. Piramal, of course, is up 4.5%, so that's okay. Zentech is up 3.5%. It was up 5% yesterday, if I'm not wrong, so 969 and counting on that one. Good going there. And, the Kush was making this point about how some of the companies got beaten down and people thought it was the end of the world. Inox Wind, for example, went down all the way to 425. It's now back to 545. BHEL, of course, 2.5% higher. So those are a few which are really standing out very, very well amongst the well-known names. And then, of course, there are a few. There is Ramki Infra, which is up about 11%. There's a Mindtech, which is up about 7%. So those are a few others which have done well. Repro is up about 6% as well. So a few smaller ones which have done okay. Kush, Bohra, opening thoughts on how we've started off about 1/3%. Can we do more, or would you stay light ahead of the weekend? And any stocks that catch your eye in the first 4-5 minutes of trade?
So as far as the indices go, well, we've got that, positive opening, but, at the same time, the 22,200 call option is seeing a massive build-up. So I think, the range is going to be 22,200 and 22,100. Perhaps, we may see a bit of a dip going forward. The reason for that is there's a lot of stocks that we discussed, that were, showing a much higher level in the pre-opening haven't really sustained. So, maybe the index might follow suit. So there could be a slight dip that, we could see, going forward in the day. Even if that doesn't come around, I think 22,200 is a good level or thereabouts to close. Will be a good base for the next series to, begin and move to the levels that I said, 22,500 and then 22,800. Couple of stocks on my radar. Indian Hotels continues to shine, although it's a little off the highs and slightly in the red. I think for the next series, this is one stock that investors can watch out for. From the current levels also 605, 625 are the levels on the upside, and a couple of other names that are doing well. CAMS is attempting a rebound from its 50-day moving average, so that is also one stock that I'll have on my radar. So Indian Hotels, even if it's showing a mild red on the screen, I think it's a good time to start accumulating from at least a 1 to 2 month kind of a time horizon.
Okay, Nirav, like I said, we will ask you about GOCL Corporation. If you don't track it, but nevertheless, in 1,900 crores of market cap, 3,400 crores coming in from a land, a stock is up 10-11%. Would you chase something like this?
Actually, I think it's better to avoid, because what happens is that in such companies, basically the land, which was the underlying asset, it is carried into the balance sheet at historical cost. And whenever it is sold, of course, it is sold at the market rate. And suddenly the market realizes that the market cap is at a huge discount to what the proceeds are, which has happened in this particular case. So there's no point really in chasing this rally, because I think most of the stock would have been cornered by now.
Right. Kush, two counters that have done quite well very unexpectedly is VIP in today's trade. It's up 8%. And Zen, after that 5% up move, trades with a gain of 3%. Constructive call on either of these two?
So VIP, we did have a track on, for some time. But, the stocks actually just made a dead cat bounce. If I see for the last couple of sessions, it was trying to form, a bottom. And then, today what we're seeing is a dead cat bounce. The 500 level, not only a psychological mark, but also has a technical significance, as in the 20-day moving average lies there. If it is able to close above this, let's say for today, then perhaps, we could see some sort of a momentum building, and, 525 and 540 are the levels that, the stock could attempt. Otherwise, we may see some sort of a consolidation for at least, some time to come. So the 500 mark, I will watch for, very keenly. If it does close above that, then yes, there is a momentum play to be had here. As far as Zen Technologies goes, the stock has seen a gradual uptrend, and now, it's nearing the near-term highs of about those, 1,000 levels. So this is a buy. Any closing above the 1,000 mark will actually push it further to about 1,100 and 1,170 levels. So Zen Technologies, different spaces, but since we're talking about both of them, VIP and Zen in the same breath, Zen actually has, a stronger footing compared to VIP.
Right. Nirav, what are you doing with the likes of Prestige Estate? Had a big rally a few days ago, largely on back of that big land bank that they picked up in Delhi NCR. Today, of course, the counter is seeing a little bit of profit taking. Very undecisive, right, in that sense, with some of these real estate players. Prestige on your list?
Yes, definitely, because we've maintained that view that the best is yet to come as far as the real estate sector is concerned. And most of the frontline listed players are coming out of their comfort zones. They're moving out of the areas which are traditionally their strongholds, and exploring and entering into newer territories. And luckily for them, the response has also been quite strong to all the new projects which have been launched in new territories. So I think we'll definitely hold on to the positions as far as real estate stocks are concerned.
Right, that's the call coming in on real estate. Technically, Kush, what do you think on Prestige?
Well, very smart rebound. I wouldn't really be worried about today's move. I mean, for the last 5 sessions, the stock's been doing rather well. And from a technical perspective, the resistance was at 1190, where, the stock hit a high and then, just turned around from there. I think this dip is a buying opportunity. So from here on as well, if someone wants to accumulate prestige, not a bad idea. I think, 1300 is a good positional target once that is taken out. We're looking at 1380 also on the upside, and a stop loss comes in at about 1090, 1050 kind of zones. One stock in this space that, we like is Shriram Properties. This stock too had fallen to its 200-day moving average, but stays a smart recovery from there. So, slightly smaller ticket size, but if someone wants to keep this on their radar, they can. Shriram Properties is also something that, we like in this space.
Right. A couple of these pharma stocks are looking really good, actually. Biocon has got approval for its formulation business, so that's why the stock is looking good in the UK for their drug, diabetic drug. You've also got Wockhardt that closed out on their fundraising plans. In fact, we will be talking to Habil Khorakiwala shortly on what he plans to do with the funds that have been raised. The stock is also up. In fact, pharma as a pack is not looking bad. Nirav, you have a view on any of them? Wockhardt managed to raise some money. Biocon continues to get approvals now for a diabetic drug. I'm not sure what the market size of that drug is in the UK, but nevertheless, it's definitely a step in the right direction. Aster DM, we of course already talked about. You've told me how you prefer hospitals, but just a quick word on Biocon and Wockhardt, if you may.
I think Biocon has been languishing in the recent past, so I think we'll rather wait and watch the developments as far as Biocon is concerned. But as far as Wockhardt is concerned, they've done their fundraising very successfully, and now it remains to be seen. We want to hear more from the management, what plans they have in the near future. And I think we'll take any call only after seeing at least the quarterly results, following the quarterly results for at least Q1 and Q2 of the next financial year.
Okay. Sorry, Kush, I don't know if we've spoken Wockhardt with you or no, but if we haven't, it started off again 3% higher. Is there more in store?
Appears so. The stock has been rising, steadily, and all the dips have turned out to be a buying opportunity. So from a trading perspective, someone's keen, then, for sure, 620 and 650 are the near-term levels, that we're looking at, and a stop comes in at 525. So very decent moves, although the confidence would have been higher had the volumes picked up. But even without that, the price action has been, rather convincing.
Okay. Fair call. Gentlemen, thanks so much for taking the time out and being with us today on the show, and have a great Easter weekend.
Thank you.
Well, on the note that we are now trading nearly at the high point of the morning, 0.5% higher. So it's really strong showing. And a clutch of stocks are doing very well. Tata Investment is up 5%. But that notwithstanding, Chalet, Relaxo Footwear, IIFL is up another 3% as well. And there is strength in Symphony yet again. I think Symphony's, you could argue, has been one of the key stocks in the last few days. The last 5 or 7 sessions maybe, Symphony's had a really good up move. I don't know if it's the expectations of a strong summer which is leading to this as we transition from beliefs of El Nino to La Nina. But Symphony over the last 5-6 days has actually had a really good run. As we hit that break, watch out for this stock in particular. Hit that break. Up next, a small slice of a special conversation that I had with Tata Communications Kabir Shakir Ahmed, and later we speak to Wockhardt's Habil Khorakiwala, who's Samina will be in conversation with him on the QIP and more. Thanks for tuning into Profit Insights. At times on Profit Insights, we try to talk to businesses which might not be the easiest to understand at first glance, and then try and understand what the longer term outlook from the head honcho of the business could be like. Now, that's the kind of conversation that I think we've slated for today. We're in conversation with Kabir Shakir of Tata Communications to try and understand how would the next 12 to 24 to 36 months pan out for Tata Communication after they having in some sense built a bit of a base over the last 3 or 4 years on the operational metrics. Kabir, thanks so much for taking the time out, and hope the month of Ramzan is going on well for you. We've decided to split this into 2 segments, Kabir. A small first half, a lopsided large second half. In the first half, we'll talk about the here and now. The second half, we try and talk about what you think about the future. So I'll start off with the here and now. Based on what you've done in the first 9 months, some bit of, from an analyst perspective, relative to estimates, some bit of pressure, especially in Q3 on EBITDA, so on and so forth. How is the near term suited for growth, or will it be a period of consolidation?
Firstly, thank you. Thanks for being here with you, Niraj. I would say for us in Tata Communications, the last 3 years have been quite transformational. But this year in particular, is really, something which we will mark in our history, because this year we completed 3 acquisitions, and I think we did, few acquisitions probably a decade ago, and we've now come back, into the fray. But why am I particularly pleased about is that we got the balance sheet hygiene and the strength to be able to aspire for these acquisitions and bring these targets in home. They make a lot of strategic sense. They are completely aligned with what our strategy is and where we want to take the business. So this year has, therefore, we should see from that perspective as some kind of a first inflection point, in Tata Communications getting onto that fray. Now, leading up to that, what was the business 3 years ago, where we had quite weak, financial performance, a weak balance sheet. Our first marker was to get this business to a double-digit growth. And with COVID, that did take a little longer. Therefore, it didn't mean that we will not fire on other cylinders, whether it's EBITDA, whether it is ROCE, EPS, our gearing levels. All of them, were probably the best in the recorded history of Tata Communications ever. And then 4-5 quarters of consecutive double-digit growth is what we clocked in. And then we looked at it and said, what next? So we've now stuck our neck out and said, we will double our data business by FY27. So from 14,000 crores, we will take this business to 28,000 crores. It has a mix of organic and inorganic, and when we said that, Kalera was not yet approved by the board. So I don't want to put a target on inorganic, because it will be irresponsible. Then you will go chase a target. We should do an acquisition if it makes strategic sense and it gives the right value to both the shareholders, and that's what we will pursue. And it so happened that we were lucky to get an asset like Kalera. We had closed, rather we announced Switch already, before this, this announcement that we actually made. So both Switch and Kalera, I think, are great strategic assets that we've got for Tata Communications. Now, the resultant impact of it, as you rightly called out, there was a pressure on EBITDA, but that is weighted average mathematics, as simple as that. You acquire 2 loss-making business, you acquire them at a multiple less than 1, in the tech sector. So obviously there are going to be some, hiccups, and that they were loss-making, and that's the reason why they were available to us in the first place. But I'm glad to say, in the very first quarter of closing and integrating Kalera, we have made them EBITDA break-even. In fact, they are EBITDA positive. And that's because the low-hanging cost synergies and the cost benefits, we started working the day we announced and had our plans between the announcement day and when we closed the acquisition. I mean, simple things like they are NYSE listed, SEC regulated entity. So a lot of costs that come associated with that. Within 10 days of closing, we delisted the entity from the New York Stock Exchange. So we have got now, great plans to capture the revenue synergies that we have, identified in the business case. So I would say, this year we will continue our growth trajectory. The three KPIs that I look from a financial perspective, EBITDA, ROCE, and net debt, all three will depart from their ambition range. Debt to EBITDA will come back faster, under 2x. We are probably at 2.2x now. We used to be 1.3. We'll come below 2x in FY25 itself. ROCE will take a little longer, a year longer, and EBITDA maybe 2 years. But that's the mode of investment that we will continue to push this company to. And that's the strategy on the finance strategy that I spoke to you earlier about. Our fit to grow strategy is to continuously reinvest, the benefits that we get from the business, to acquire capabilities, build capabilities organically, so we can go and capture that growth, and that gets into that virtuous circle that we want this company to get onto.
Okay. I'll end the conversation about, or maybe not then, but when does some aspects of this virtuous circle start showing meaningfully? And I will come to that, because some part of it might be showing as well. Maybe the street doesn't recognize, but you being at the helm of affairs kind of see that happening. But would be lovely to understand the numbers as they come out. But just to get the numbers thing out of the way, before I come to the overall strategy, etc., and how do you see the business? The estimates are of about between a 15 to a 20% revenue CAGR for the next 3 years from your business. The estimates are of average EBITDA margins of circa 25% at some point of time immediately. The estimates are of return on capital employed to be 25, 26, 27%. Are these reasonable estimates to work with for the next 3 years?
Yeah. Let me answer the first question on the virtuous circle, because that's close to my heart. It's already playing out. Why do I say it's playing out? The numbers are there to prove itself. We bought the Switch asset at $60 million, 59.8 to be precise. And the entire funding of that was done through working capital movement. We didn't borrow a cent from outside. Our gearing did not increase. Now, Kalera, on the other hand, is a much larger asset, and obviously, we had to borrow. We had to also acquire their debt. They had a $220 million, debt that we actually acquired as well, gross debt. But Switch was completely as a result of the virtuous circle of growth coming in through. We generated the efficiencies from within, released the cash from dead, unhygienic processes, better control on receivables, better capex efficiency, better tax efficiency, and all of those combinations gave us the cash that we can go and invest in a revenue generating asset. So nothing changed in our balance sheet, and we suddenly got $80 million of top line. So that's the virtuous circle of growth, working for you. Coming back on the estimates that you mentioned, I call them as our ambition, and I always like a range to give. And the reason why I like to give a range is that I don't want to be pointed to a point number, right? Because the economic cycles are going to be volatile, right? And the businesses need to be resilient enough that they operate in that range and still give a little bit of a certainty to the street as to that's the ambition, of that. Doesn't mean to say that we will not depart from that range for good reasons. Like while we were in COVID, we were operating north of the 25% EBITDA range, right? So we were generating more profit than otherwise we would have, we would have stated in the 23 to 25 range. So with that said, I'll come back and reiterate our ambitions. Yes, we would like to be in the double-digit growth, and if you say that we are going to double our business by FY24, you can do the CAGR. It's 18%, but I don't think it will go through organic every quarter, 18%, because there will be lumpiness, in the kind of growth aspirations that we seek because of the nature of businesses that we are in.
Sure.
So that's, about the top line. On EBITDA, our stated goal is 23 to 25. That's the range that we would like to operate. this year one can do the math because we've announced the switch numbers. Kalera is a public listed company. In fact, the street was slightly surprised, positively by our EBITDA number of last quarter. They actually thought, it will be a little lower than what it is because the cost synergies we actually got in and we delivered a better number. Again, hopefully in 2 to 3 years' time, we will get EBITDA back to the 23 to 25%. And ROCE is greater than 25%. I mean, that's my ambition, that I maintain the business generating a return on capital of greater than 25%. That's embedded in fact, all of our internal working processes as well, right? Whether it's clearing our capital proposals or any other value creating proposals that actually come in, they need to be generating that kind of a return. So we want to increase our capital outlay, but we want to also increase with an eye on returns.
Fair call. We'll take a very quick break on that note, Kabir. Come and try and talk about how will Tatacom move from what it is right now, understand that too, to what it could be. It's great to get this detailed insight from Kabir. So viewers, stay tuned. We'll be right back.
welcome. We have with us a very special guest. Habil Khorakiwala of Wockhardt is going to be talking to us now to talk to us about a very successful QIP. Wockhardt, the stock has rallied over 5%, rallied 5% in trade after the company said it's raised 450 crores via QIPs and has had a bunch of marquee investors come on board. Mr. Khorakiwala, thank you. Thank you for joining us. Congratulations on successful closure of the QIP. It got snapped pretty much instantly by very qualified marquee investors. Begin by telling us what are the plans for these funds that you've raised?
We have primarily have 2 or 3 areas where we need funds, and that's why we did this QIP. One, obviously, is a new drug development of 5222. And we want to complete this phase 3 clinical trial in time. And that is where part of the money will be utilized. The other one, obviously, is to build up our business portfolio of launching these two new products in India, Nifty during this year and early next year, 5222. Both these would require initial investment in developing business. And that is what we intend to do, and that is where we will have a very significant penetration strategy, which we have worked it out on that. The second area is obviously a need for normalizing our business and some other corporate purpose, basically.
So let's take this one at a time. And a couple of areas I want to cover with you. WCK 5222 and WCK 4873 are the big bets for you and for the company. Can you explain to me, these two products, of course, are going to require a lot more money. They're both in phase 3, I believe. Part of the fundraise will be, of course, go towards those products. But is this, can we expect more fundraising? Is this part of a bigger fundraising plan for Wockhardt?
No, I think this is initially we have raised this equity from what we need for next 12 months or so, 12 to 18 months. And we hope the business will normalize and generate cash flow for our future needs. If, however, we need future funding, we will obviously look at various options of equity or debt at that point in time.
So no part of this equity will be used to retire any debt on the books, sir?
Oh, yeah, we have about 100 crore debt on the Indian book, which is external debt, and that will be retired as a part of this funding.
Okay. Also, let's now look at the business as whole, right? The two big bets for you, like we said, is WCK 5222 and WCK 4873. What are the sort of margins you're anticipating on these products, and when will they turn revenue accretive?
We expect from the day we launch the product 4873 this year, it will be revenue accretive, definitely. Same will be 5222 whenever we launch it. The margins, like in the new drugs, always are very good margins you have. Nearly 80, 90%, 80, 85% margins. One is working on a new chemical entity, and that is a margin we will be working with.
So by mid FY25, can we expect contribution to top line on that, sir? From these products?
Definitely.
And then what would that do for your blended margins? Because like you said, the margins that these two products enjoy are exponential. What do you think internally are you setting out for yourself in terms of blended margins for Wockhardt at a group level?
See, we have to also recognize that there is an initial business to be developed. There is an initial organization to be created. And that is kind of expenses are there. So it will definitely have an impact on the top line. Probably blended margin, it would remain slightly elevated than what it is today. But going forward, it will have a more and more significant on the blended margin, mainly because ratio of this new molecule will go on increasing to our total sales.
So what is the total available market size for WCK 4873, and how much of that market share do you hope to own?
See, we are focusing really on specialist promotion and communication, because like chest physician, chest specialist, pulmonologist, or ENT specialists are the one where they receive and get the patient which are referral patient. And the older drugs have been tried. In many cases, it has not worked. Now, our biggest advantage is it works on 97.4% success rate is there. So therefore, it is a very attractive idea to specialists that they can prescribe a drug which works. So we expect, and collectively, there are about 22,000 specialists, chest specialists and ENT specialists. And they collectively have about 35 million prescription they give for antibiotics for the chest and ENT where our drug can be used. So we do expect a very quick acceptance, a quick uptake on that. The second aspect is that many of these patients cannot be treated with the oral treatment, and therefore they get antibiotics in the hospital, and some of them gets hospitalized. Now, with our molecule, the need for hospitalization would be very significantly reduced in most of the cases. Excepting some of the very serious cases, they will need hospitalization. So if you look at it from this point of view, it is a very cost-effective for patients who are getting any hospitalization or IV injections in the hospital. Our molecule is there. And it will be reasonably priced at around 2,000 rupees per treatment.
Right. So in 23, you had indicated by FY25, the company would be positive in terms of making profits, tax profits, profit before tax. Are we still on that goalpost? Does that still stand?
Yeah, I did mention that we will be EBITDA positive.
So if I put a timeline to it, first, second quarter FY25, is that a fair expectation?
I think so. It's a fair expectation.
Right. Also, bring us up to speed with what's happening on the contract manufacturing business. When we looked at a couple of presentations, and beyond serum, there is nothing really that's caught our attention. Any conversations there underway? Because that business as well was looking good for you.
As far as serum contract, you are familiar with it, and we are in discussion with serum, and we hope that some movement will happen in next few months, where they will have a couple of products coming in, and we would see a revenue coming out of that in FY25-26.
FY25-26. And any other conversations underway for contract manufacturing?
Yeah, conversations are underway, but I cannot comment on it unless something concrete happens.
Right. Also, from a con call a while ago, there were some indications of launches of diabetes portfolio insulin in various emerging markets. You want to bring us up to speed if there's been any developments on that front?
Yeah, I see our strategy which we have envisaged is we have a competitive advantage in terms of diabetic portfolio on two fronts. One, we are really focused in India and emerging market. Then we have manufacturing, we make our own API, we make formulation, we have our business in place, we have our own pen. So we would be cost competitive, one. But equally important is we are coming out a whole range of diabetic product in the next 3 to 4 years, where patents are expiring in emerging market. And when we put both things together, we believe that it will have a very significant upswing in the next 3 years or so.
Right. Thank you very much, Mr. Khorakiwala. It was great talking to you, and good luck and congratulations once again on successful completion of the QIP that was launched. That was
pleasure talking to you.
Pleasure very much. We'll hopefully see you soon. That was Mr. Khorakiwala outlining the fund utilization plans. They had a successful closure of a QIP to the tune of 588 crores, and of course what the outlook for the company is going ahead.